This week made something painfully obvious to me. My strategy isn't necessarily the problem. I think a lot of the time I'm the problem because I had multiple trades this week that were completely fine until I started interfering with them. I mean, I closed one trade early, eventually went straight to TP. I did almost the exact same thing on different accounts. And then later in the week, I got another trade that tested me probably more than any of them combined. This time I did absolutely nothing, and that was a trade I actually won. So this week wasn't really about trying to find a better strategy. It was more about learning when to just leave a good trade alone. And considering that I've lost quite a bit of funding over the last few months, that's been much harder to do than it probably sounds, if I'm being honest. Right now, I've got 4 50k accounts that I'm actively working with, 1 funded account and 3 phase 1 challenge accounts across funding pips, bright funded and funded next. And then I'm not going to pretend this week was perfectly clean, if I'm being honest. It really wasn't. I took quite a few trades and I was testing things, so to say. I was trading my normal strategy. I was also forward testing this New York open model that I've been working on behind the scenes. And at certain points, I was honestly a little bit all over the place. But there were some really useful lessons in that. Starting with the funded account. So I came into the week slightly in drawdown on this account, and my main objective wasn't to do anything spectacular. I just wanted to trade well enough to get myself above water. The first EURGBP trade is probably the best example of what I'm currently trying to fix. I had the setup, I took the trade, but while I was in it, I started getting a bit uncomfortable with the price action. So I closed the trade. I closed it. It basically was a break even or a very small loss. And then, of course, price eventually went to my original TP, and there was nothing fundamentally wrong with the trade. I just didn't allow the trade to work out. That distinction is really important, because sometimes you close a trade and generally save yourself from a loss, but other times you're not managing risk, you're managing discomfort, and those are 2 completely different things. I then had another EURGBP trade that didn't work as well. I could see price starting to reverse against me, and I closed that one early, roughly for about 0.5% instead of taking the full loss. I'm actually fine with that decision, but then I got another EURGBP opportunity, and this one really tested me with it. This one really tested me. It tested whether I had learned anything so far. The setup itself was straightforward. I had my directional bias, which is usually on the 4 hour. I followed the direction of the 4 hour. That's my directional bias. The 15-minute chart aligned with that direction. I got the break and retest I was looking for, and then I got my engulfing confirmation for the entry. So once I was in this trade, there really wasn't anything else for me to do. But price didn't make it easy. It really didn't make it easy. I was in drawdown for close to an hour, and then eventually price pushed in my direction and got fairly close to my target. And then it came all the way back down. I nearly lost my head there. I nearly closed the trade again. Basically back towards my entry, and this was exactly where the older version of me probably started trying to interfere again. I wanted to move this up, close something, and just take partials, just do anything to make myself feel like I'm controlling the situation. But this time I didn't. I just left it, because the reason I entered hadn't been invalidated just yet, and eventually the trade went to my target. That trade probably taught me more this week than any of the losses did, because I'm starting to realize that set and forget ideology, it doesn't mean that you're being careless. It means doing the analysis and risk management before you enter the trade, instead of trying to make emotional decisions once your money is already on the line. If my system genuinely has an edge, then constantly overriding it defeats the entire point of having a system. And between this EURGBP trade and a clean Euro card winner that I took for roughly 2 hours, I managed to get the funded account out of Drawdown. I mean, I'm only around $100 in profits right now, so it's nothing crazy, but I'm grateful to God that I managed to work my way back out of it, and I'm going into the next week, and I'm not trying to suddenly make more crazy profits, 10%, none of that. If I can add another 1 or 2% while trading properly and putting myself in position for a payout, I'm perfectly happy with that. Especially now, I need to think more in terms of stewardship than excitement. I need to protect the account. I need to execute properly, and then the results should follow. Everything usually would take care of itself if I just follow my process. The second thing I've noticed this week is that it's been a bit tricky trying to mix two completely different activities. I've been trading my proven setups, and I've also been testing new ones. I don't think I've done a good job separating those well enough. On my funded base account, for example, I was testing the New York Open strategy that I've been developing. I took a loss on US 500. I also had a GBP NZD trade that actually went in my direction, and that was a win for me. But because I had losses, or rather, it was going to be a win for me, but because I had losses behind me, I started getting a bit nervous about giving the profits back. So I closed it. Yeah, I closed it for around 1.4 hour, and once again, price actually continued to my full target. Yeah, that showed me something about my psychology, honestly. I'm much more likely to micromanage a winner immediately after I've taken a loss or string of losses, because you're no longer just looking at the current trade. You're thinking about your previous loss. You're thinking about the drawdown. You're thinking about the account. And for me personally, I've lost enough accounts over the last few months that I can feel that it's actually starting to affect some of my decisions. There are some responsibilities outside of trading, and I can't just endlessly burn through accounts. So being more careful isn't necessarily a bad thing, but fear disguised as risk management can still manage your results. That's the balance I'm working on at the moment. The New York strategy itself is still a work in progress. I also traded it on the Bright funded account. I took 3 trades in total on that account. 2 were wins and 1 was a loss. One of the winners was on gold. So I'm currently up about 1% on that challenge. The backtesting I've done on this strategy now suggests that the one-to-one version can be profitable. And after making some adjustments and some tweaks, I've also managed to get promising results from a 1 to 2 hour version of it. But I can't say it's finished just yet. Free live trades don't really prove anything, if we're being honest. This is trading after all. Backtesting tells me the idea deserves further testing, but usually forward testing tells me whether I can actually execute on it, because in live environment is a different condition entirely. It's not just executing a trade. There's so many other factors involved, and that's the stage I'm at now. One thing I'm changing though is where I test it, because a challenge account probably shouldn't become a laboratory or like a testing ground for every idea I have. If I'm constantly changing variables while I'm also trying to pass an evaluation, I can't even tell whether a bad result came from variance or bad execution or the strategy itself. So I probably need to make a much cleaner separation there. That's something I'm also still working on. I also had an AUD CHF trade on my Fund the Next Challenge account. That actually annoyed me quite a bit. The trade eventually traveled to my TP, but I had already been stopped out before I had a chance due to spreads, which was quite annoying. I ended up checking. I ended up checking it afterwards with Fund the Next, because I wanted to understand exactly what happened and whether I liked the outcome or not. There still is a useful lesson there. There's always a lesson in everything. Your chart idea can be right and the trade can still lose. That's just trading. Execution matters, spread matters, and the exact price used to trigger your stop actually matters as well. especially when the stops are tight. If you're taking between 1 and 5 pips, or sometimes even 7 pips, you really need to consider spreads, and you really need to consider spreads in your execution, and your choice of stop loss, especially if you're trading CFDs. Those things have to be accounted for as part of my strategy, rather than something you want to think about after having stopped out. That's something I need to consider. I also had a few other losses on that account, but I finished with a clean USD card winner at 1-1. Nothing dramatic, just a straightforward trade that did exactly what it was supposed to. I took the setup, and I just let it be. I set and forget, and that was the result of it. So going into next week, I'm actually planning to simplify things. First, I want to stop micromanaging my trades that are actually still technically valid. If the reason I entered hasn't changed, my emotions don't get to create a new exit condition. Second, I need to separate execution from experimentation. I need to stop all this, testing of several strategies using my challenge accounts. My main strategy is already defined. That's the forward direction, the 15 minutes alignment, break and retest, and engulfing confirmation. It's very simple. That's what I'm trusting on the accounts that actually matter. And if anything, I'm still developing, needs to earn the right to receive a meaningful risk. And third, I'm slowing down, actually, because I've noticed something about myself recently. When I feel like I need to recover something quickly, I start looking for more trades, more strategies, more opportunities, and more activity doesn't automatically mean you're going to progress. It doesn't automatically mean you make more progress. Sometimes the best thing you can do for an account is become extremely boring. It's just to slow down and just chill. Coming into the week, I have 4 pairs that are going to be of interest for me this week. We've got EURGBP, we've got GBP AUD USD, and GBP NZD. These are the 4 pairs that are going to be on my watch list, on my focus for this week. Kicking off the week with EURGBP. As you can see on the chart, price broke this major 4-hour level, broke to the downside, closed below, and has retraced all the way up to about 80 to 90% of the overall range, and now is on the continuation move downwards. All this indication, or in fact, it's not an indication, it's already happened. It's very clear now that price is bearish, and you should only be looking for bearish opportunities at this point because it's already retraced, and now it's on the continuation move back and impulsive move back to these lows. We're looking for these lows to be taken out. If we go down on the 15 minutes, as you can see, price has been making a series of lower lows and lower highs and lower lows and lower highs, and now it's made a lower low, broken this, closed below, and now it's retracing back to continue the move downwards again. So coming into the week, what I'll be looking for is price to retrace all the way to at least 50% of the range. I don't like to take trades here because we are currently in discount, and we need price to be in the premium of the leg before we actually look to sell. So I'm looking for price to go back all the way to 50%, or maybe 60 or 70 before giving my confirmation, and then I take my entry all the way down for a nice risk to reward. Depending on what the market gives me, I'm always open. I don't have a set risk to reward, but I do take a minimum of 1 to 2. This week wasn't perfect. I had a couple of losses. There was definitely some over trading and a bit too much experimentation on my part. But the funded account is back. It's our drawdown. The bright funded challenge is moving in the right direction. And more importantly, I think I'm starting to understand one of the biggest things that has been damaging my execution. I do not believe I need another strategy, and I definitely don't need another confirmation or another confluence. I don't even need better trade management. It's very simple. I just need to stop touching my trades and just, I don't know, maybe just lock my hands in a box after I execute a trade. That's probably what I need to do. But yeah, going into this week, I'm really excited to see how I'm going to execute my plans this week. So I'll see you in the next one, guys.